Hi, everybody. I hope you're all doing well. So, this is a short series on crowdfunding, specifically crowd investing into the real estate market in Germany, especially for those who don't have a lot of money. This could be a way of investing here, at least in Germany. So, I decided to make these videos because there's not a lot of information available, at least in English, on this topic. There are, of course, information available in German since most of these platforms are in German, but you can get the gist of it, especially with the Google Translate at the top of what information is available in this project. So we'll mostly first, I think I'll show you guys how the platforms work and how they sometimes decide on the risks involved in certain projects. I'll give a basic overview, and then later on, I'll maybe delve a bit deeper into each platform. I'll also tell you the risks involved and what to watch out for, especially since some of these platforms don't really do their due diligence, and why I would personally not invest in these platforms. I'll also give you my experience of what I face and the things where I did good and the things I didn't do, or the projects I did well and the projects I didn't do well. So, and I'll also give you information on why why these projects would utilize these platforms instead of just going to a bank. So, the first thing that I would like to say is that obviously these videos are not financial advice, and this method is high risk, just like all other the stock market and everything does have a certain amount of risk in it. So you could end up losing all your money. And what I will be providing you is just my experience and how you could benefit from it. Obviously, the good and the ugly side of this form of funding or investment. And I wish you all good luck. So I'll just give a basic overview, at least in these slides. And then later on in a different video, I'll talk about everything in more detail. So I'm just going to give now a basic overview of what crowdfunding is. So crowdfunding is the process by which a borrower goes maybe to a platform and asks or places his project on that platform. That platform then shows this project to people who might want to invest in it. So these lenders then provide obviously their money or pool their money into that specific project, and then it goes to that borrower. So obviously not all crowdfunding are investments. Some crowdfunding are just for charities. For example, someone has he wants to go to school, so he hopes that there are people that could help him. So he goes to a platform, says the description of why he needs the money, and then these people, lenders, provide the money for him, and it goes to him. So there's no real benefit other than obviously your self benefit, where you feel happy that you provided that money for education. And of course, there are other projects that instead of providing you interest or so forth, they provide your product. So that would also be a form of crowdfunding, and there's no real monetary value that you get out of this project. So these are the ways that crowdfunding works. So as I mentioned, there are different forms of crowdfunding, and some are investments, some are non-investments. And I'll just show you the different crowdfunding types that you will see on different platforms. So, for example, we have donation-based crowdfunding, where people obviously donate small amounts of money to support a cause or project without any financial return. An example would be the GoFundMe platform. Another form of crowdfunding can be reward-based, where lenders provide funds in exchange for rewards related to the product itself. An example could be the Kickstarter platform. And then there's also the equity crowdfunding. Now, this is where you might obviously get monetary value, but in a different way. For example, you fund in that project, and that project provides you shares or equity in that company, such as obviously Cedars and Crowdcube. Crowdcube is quite famous. And there was this, from my experience, there was one of those platforms where that provide like hotels.com, like a hotel-based platform, and it wanted to raise some money. So it went to Crowdcube and it provided a certain amount of shares. And of that share, obviously, if you invested, I think it was like $1,000 or euros, and you get a certain number of shares of that company, which is beneficial. But again, I mean, you have these shares, so it's usually a long-term hold because they're not in the stock market, so you can't sell it easily, and you need to find someone, unless the company itself sells itself, so another company buys these shares off you. Other than that, you just hold on to these shares until who knows what happens. Either it goes bust or you makes a lot of money of it. And of course, the last one, which is the one I'll be concentrating on, especially for the real estate investment, is the debt crowdfunding, where lenders provide money to a business or individuals in expectation of being repaid, obviously with interest. And I'll mostly concentrate on the peer-to-business, or obviously crowd estate, and crowd investment in the real estate, and not the peer-to-peer, so individuals funding other individuals. Unfortunately, I had to record this slide again. So here we have like some platforms like Rocket Investment platform. This one has the Biogena Plaza rollout, and they provide a combination between debt-based and reward-based funding. So here's an example of the Biogena Plaza rollout. They provide 8% interest. The duration of the project is till September 2028, and they will fund you, and they require funding of 3 million. So there you have your debt based, where they pay you 8% on whatever you invest, and you have the reward base, which is at the bottom of the website, where they say if you provide a bulk of 5,000 euros, then they will provide you with a 3-minute cryotherapy. So here, for example, you have, and they have, like, in this instance, we have 600, for example, coupons, and 474 people have already provided a bulk of 5,000 euros as investment. And so they have obtained their 3 minutes of cryotherapy. Personally, for my case, I'm not someone who invests bulk. I rather invest small money, but that's to everyone's choice. I mean, everyone decides how much you would like to invest. So here you have the Biogena. It's quite, it provides like those micronutrients for the pregnancy, and also liver sports. And you have the Plaza, which also provides infrared, all this cryo chamber stuff. So, I mean, it's understandable why. Personally, I think for me at least, I mean, for maybe high net individuals, this would be a small amount of money, maybe. So here you have examples of the crowd investing platforms, especially in the real estate in Germany, and famous ones at least. You have Bergfürst, Engel Völker, Created Völker, which also has stocks in the stock market. You have Zinsbaustein, Exporo, Rockets Investment, Yandity, and Alphabet. I mean, the ones that I prefer the most are obviously top two, so Bergfürst and Engel Völker. The rest, let's just say I've had good and bad experiences with them. So obviously I'll be making more videos going in depth about each platform and what are the good, the bad, and but again, these are all these are all just suggestions. You need to do more in-depth research into this. So, and here is a overview now of how these platforms work. So you have the borrower, obviously right here, and he then applies for a loan on a specific platform, the ones that we mentioned before. And the job of this platform is to take all the information that the borrower has provided for the application itself, and then to determine the risk rating. So is it high risk? Is it low risk? Obviously, it has certain criterias that it looks at, and based on it, it says whether this is an investment that can be put on our platform or whether this is an investment that they reject right away and they do not accept it. And based on if it's placed on their platform, then they give it a certain rating. So every platform has its way of looking or analyzing a certain project, right? So this is an example of Engel and Völker, and they have the market, the location, the construction, and the economics of a project. And of course, under each one, there are different criterias. So for example, the location, is it located in a major city or is it located in a minor city in Germany? Obviously, if it's located in a minor city, are there any schools nearby? Are there any hospitals nearby? So what they do is they take all the documents that the borrower provides and they look at obviously also all his calculations. So is the revenue he's expecting, is it realistic? Is he underestimating the costs of this project and overestimating his revenues? So all these are obviously looked at by the platform. And based on it, they then determine the rating. Now, Engel for example, doesn't just, so it's not the only one that looks at the application. They then also provide it to other people that they have subcontracted that also take a look at the documents provided and also are more people who are more specialized in this. And they then also see whether these things make sense or not. Here's another example of Exporo. They have their risk analysis. For example, they have the project status. Is it something that's already built and just requires refurbishment? Or is it something that's still going to build? Do they already have the building permit or not? Obviously, if the project still requires building permit and all that, then it has a higher risk and has a longer duration. Another thing they look at is that the project developer, how experienced is that project developer? How many projects has he performed? Obviously, the more project he has, then the less the risk as compared to people who are newer to this business. So now that the project has been assessed by the platform, they then put the project on the platform. And of course, they add the information of the interest that will be paid yearly, how long will the project last, and the funding of that project. Then they have the last part would be the risk rating that they have determined this project deserves. And according to, obviously, there's more information, so each project, when you open it, and each platform has different things that are present within the project. like the description, obviously, of the projects, its location, and all these things. We, as investors, will then look at the description of the loans, and then we will determine what is suitable for us depending on our risk appetite. And that's it. Of course, the project is open either for a few days or a few months, maybe longer, depending on, for example, the rules of the platform. For example, a platform may add a certain threshold, and if that threshold is reached, then they just fund the project. So, for example, you have 1 million. Once that 1 million is reached, that's it. The project is finished. And it then gets sent to the borrower. Another platform might say the threshold is 500,000. And once the 500,000 is reached, they still allow you to fund it more. So it says, okay, the threshold is 500,000. You can fund more if you want, but the maximum again would be 1 million. So once it reaches that threshold and the time is finished, it can already give it to the borrower. Here's an example of what I mean. So you have a project that provides 10% interest per year. Obviously, the risks would be AA. The length or the duration is 24 months. And the project is available on the platform for funding for 11 days. So you have 11 days to reach the funding that the platform requires. So their threshold is 50,000. So if the 11 days finish and they have the 50,000, then it goes to the borrower. However, their funding limit, so the maximum that you can fund the project, is 500,000. So, for example, in this case, they have till now invested 61 or obtained 61,000 from investors. So that's 122% of the 50,000. So now the threshold has been reached. The extra money is for the funding limit, so the maximum. So usually platforms like Engeln, for the very small projects, the funding is very quick. Like in a few, especially for the small project, I think it's usually like in half an hour, they have all the money that they need. This is an example of Dagobert Invest. They usually take longer, so a longer amount of days are required for funding. Obviously, nowadays, since the economy is not doing good, most projects are taking longer to be funded. So this is the fast step of how it works, is that once the time period's up, the borrower repays the interest to the platform, and then the platform distributes it to the people that invested in this project. There are different ways in which this interest is paid out by the borrower. I'll show you a few examples. Here is an Engeln. This is an example of the platform right here. They usually repay the interest quarter, which is my preferred way of paying. There are other platforms that pay yearly, which is also nice. It's not a bad way. And the worst way that I don't like is when the project ends. So after 2.5 years, you get your original investment with an interest. I don't prefer this way of investment or this way of payout is because generally Germany allows a certain amount tax-free when it comes to capital investments. I don't know, I think currently it's like 1,000 euros. So obviously if you have a large amount of money invested in this project and they pay it out at the end of the period, sometimes it could go above that 1,000. And so you end up paying interest. But if it's distributed yearly, then you don't reach that threshold of 1,000. And so you can deduct it from your taxes. or at least that's how I understand. I'm not sure if there's another way, but that's why I'm not really a big fan of the end of the year ones. In the peer-to-peer platforms or those more shady platforms, you have like the daily, monthly interest or the partial loan repayment interest. That means they pay you every quarter, every year, a part of your capital that you originally paid with a small amount of interest. So in the beginning, they'll say it's a 10% interest, but you're actually getting much less at the end. So every year you get like first year's like 10%, next year's 9% because you already paid back partial, you already paid back some of your capital and so on. But usually the ones that use the fourth method are more shadier platforms, or at least that's my experience. So I've now reached the end, at least for this section, and I've shown you how the crowdfunding platforms usually work, from the borrower providing the project on the platform assessing its risk, and then presenting these projects for the investors. The investors then pool their money into that project, and when the duration comes, the capital is returned, and with, of course, the interest. That's it. I mean, usually these forms of investments are very risky. So, but what I like is that for people who have less money, it is a form of investment. It's not the best form because obviously there's risks, especially during economic issues. But back then, when things were much better, it was okay. But again, this is not financial advice. I'm just telling you about my experience, and I'll provide you examples of these experiences and what went wrong, what were the good and the bad, and I'll then provide you a second part and other parts to go into detail. For example, some of you might ask, well, I mean, if these projects are so are good, then why don't they go to the banks or angel investors or whoever and get the money from there? Why are they going to those platforms? Most probably they got rejected by the banks. No, that's not really what happens. And I think that's what I will explain in the next video, some misconceptions of why these people might, or these businesses might use these platforms. So I'll see you in the next video then. See ya.